Hi everyone, today I am going to reveal my own property investment strategy. It may fit to your circumstances or may not. So please have a look on this disclaimer before we start the video. My name is Dinesh Goyal and I'm here from Property for Financial Freedom. Here we provide one-on-one mentorship to buy properties in the growth area where data stacks with a high cash flow. We also operate as a buyer agent to buy those great properties across Australia. Today, I'm going to reveal my personal property investment strategy. The very first question in your mind should be why really you want to invest in the property? What you really want out of it and what is your end goal? For me personally, I want some financial freedom and a passive income which can allow me to quit my 9 to 5 job and I can do whatever I really want to do. For that, you have to have your end date in the mind saying, okay, I want that to be achieved in 10, 12 years from now, right? That can be different for your circumstances. For me, it is 10, 12 years, and actually, I want around $1.5 million of equity and maybe around 100 to 120K passive income, which can come in terms of rent. I'm just going to explain in that video how that can actually happen by doing the property investing. I did another video where I explained how I turned my 35K deposit into a 350K equity. In this video as well, I'm going to explain a little bit how actually property investing works. For that video, 35K to 350K, you can just go to my YouTube channel and have a look, and you will see how it actually works and how I leverage the equity. How it works is in Australia, property grows around 6 to 7% every year based on 30-40 years of data. The major reason behind that is inflation, because the inflation that growth happens. It really doesn't matter where you buy those property. You can buy those property in Perth, Adelaide, Melbourne, Sydney. On an average, anywhere you'll see 6-7% of the growth on a long-term basis. So how it generally works is, if for example you're looking for $2 million of the equity and some kind of 100K of the passive income from property investing, so how it really works is you have to build a portfolio of that value. Like for example, you want that equity in 10 to 12 years. So what you really need to do is you have to build a portfolio of $2 million, which can be a 500K properties into 4 properties. We really want properties to be a neutral or positive cash flow so that it is not harming your pocket. You can still hold it without any financial burden. Now you have 500K properties into 4 properties, which is worth of $2 million. I'm taking $2 million as a debt as well, and we generally prefer paying interest only payments. That means you have $2 million worth of portfolio, $2 million worth of debt. Now, fast forwarding 12 years approximately, so that property value is now $4 million, $1 million each for 4 properties, and you still have that $2 million debt on those properties. Some people generally prefer to have a retirement which is debt free and having some passive income, right? So now you have $4 million properties, $2 million debt. What really you can do is you can sell off 2 of your properties and keep 2 of the remaining properties which worth $2 million. Now you have $2 million properties which are paid off by selling those 2 another properties, and you have rent. For example, you're paying 500, you're getting 500 per week rent now, and that rent grows in value as well. That rent grows to $1,000 in 10 to 12 years. So you have that 2 properties giving you $1,000 a week rent, which is like $52,000 roughly for a year, which is $100,000 if you consider both properties. So you have $2 million of the equity in those houses, plus you have $100,000 coming to you as a rental income, and that's how you can get retired. So again, when you're selling the assets, you have to consider your capital gain tax and other taxes. How it really can, instead of selling it in 11-12 years, you can hold it another year or 2 years, which will allow you to cover those costs as well. But scenarios can change, things can change, so always consider all those factors when you are accumulating your debt. Now I'm going to explain how it is working for me. I bought my first property in year 2020, which was around 620k, and that property is growing really well in the value. I bought my second property using equity from my first property, and that was in Perth. That property I bought in 380k, and the third property I bought is this year May, and that property I bought in regional Queensland, which is Cairns. That property I bought for 423k. So in total now my portfolio value is around $1.7 million, because the property value, the 620k property, is now worth around 800k. 380k property which I bought is now valued around 450k. The 423 property which I bought this year is also valued around 450k. So if I accumulate everything, so I have a portfolio of around $1.7 million. So in that I have approximately $1.3 million of debt, which means I have roughly 350k to 400k of the equity. And rent as well, the first when I bought my Perth property was rented for around $400 a week, which is now $475 a week. Similarly, the Cairns property which I bought was rented for $500 initially, which is now $550 a week. So rent is growing, property value is growing. So at the moment I have a portfolio of $1.7 million. If I hold it for another 10-12 years, most likely I will have that equity of around $1.5 to $2 million, which was my initial goal. But now that the goal which you initially set is not a one-off goal, you can always go back and alter that based on the circumstances. So I kind of reached that short-term goal. So what I really need to do is now I want some active strategies. I really want to see the options for Airbnb, the options for rooming houses, or maybe a commercial property, development potential property to subdivide the lots and building some townhouses on that or whatever. So I am now working towards my active strategy side. So the one which I was following so far was passive, and that is how I'm achieving my goals towards my financial freedom. As I told you earlier, each and every person have their personal circumstances, and the strategy you have to build is based on your circumstances. I'm happy to have that chat whenever you want. I can discuss with you what sort of strategy you need to accumulate those properties and what sort of equity you are looking for in the next few years. Please reach out to discuss that, and I'm really happy to help out. In the end, I would like to say thank you for watching this video, and please subscribe my YouTube channel, go on my Facebook page, like the page, and please join my Facebook group as well. Happy hunting, happy investing. See you in the next video.